What is going on, everybody? Welcome back to Trading Learning 101. This is history right now. As we speak, everything is currently halted in the stock market. My 5 years of doing this, I have never ever seen this before. This is wild. It's Monday, March 9th, 2020. Look at this big gap down in the SPY right there from 296 all the way down to 274. This should be a 15-minute halt. This is wild. Everything is just halted. mRNA. Look at this big drop from the open. $30 down to $27. This is history right here. Have CNBC up and going. Stocks run into a 15-minute halt after SPY drops 7% from the open. You're probably going to see a lot of videos today on YouTube. This is history. With the oil on Sunday, the oil war starting up, the coronavirus, it's just freaking a lot of people out. That's what I forgot to do. I forgot to put the money sign in, SPX. But the SPX from 3,000 gaps down and opens at 2,800. 2864 and sells all the way down to 2764 and runs into a halt. I'll head right back and open this up when the markets open right back up. One more thing I want to show you real quick. The TVIX. I've never seen the TVIX gap up this high before. TVIX gapping up. From Friday, it closed at 170. Today, it opened up at 300. That's wild. I'll come right back when the markets open back up. Literally, I've never seen this before. I knew I wasn't going to trade anything at the open because I had a feeling. I've never seen this. When the S&P 500, the Dow Jones, and the NASDAQ halts, does the whole market halt? And yeah, the whole market halts. So you got to be careful. This volatility is so huge. I'm staying away from the TVIX. It's too risky. When you got a ×3, ×2 ETF like this running with the market, it's going to be bouncing like Tesla was when it got really squeezed. And if you get caught in a halt, that's pretty bad. So we'll be back here in a moment. Alright, we should be opening back up within 30 seconds here. Here we go. Markets open back up. We got the SPX. See if we could continue just selling off. If it continues selling off, we're going to run into another halt. Everything in the market just opened back up. You're about to see a lot of panic today. This is history in the making. Look at that. See, this is why you don't want to trade. And I'm learning all of this right now too. When the market is like this, you had SPX running up with momentum up to 550. And the market got halted when this stock was on the upside at 550. Market halted for 15 minutes. And then look, it gaps down all the way to $4. $1.50. Wow. All the way down to 350. Look at that. SPX just rips right back up from 350 all the way up to almost $5. And I can't touch anything though because of the overall market. It's just too risky. Alright, the SPX is just starting to get back above where it got halted. All right, now that the market is starting to move higher and higher, I'll check back later to see where it's at. I'm not just going to keep recording, so I just wanted to catch this as it was in the halt, share this with you guys, show you what happened. Everything across the board got halted, and it's pretty scary when everything gets halted like that, because with stocks with up momentum, the overall market gets halted and everything gets halted, you're in and on a position, and then that stock opens back up and you were up, and then when it opens back up it drops around $2. That's scary. A lot of people probably blew up their accounts with that trade when the market got halted, but I'll check back in later, guys. Alright, we're back with a little update. We're about to be approaching 10:30 a.m. Let's take a look at SPX real quick. SPX, since that halt, that little volatility halt from the open, when it crashed down from 28.63 all the way down to 27.64, we're able to grind all the way back up to 28.05 and slowly make higher lows and higher highs, grinding up little by little, topping out at 28.23. Now it's starting to get a little pullback, and if you zoom in a little bit, you just see these rounding tops at the top when it's making these highs. That's not really showing strength on the 1 minute chart. And even on the 3 minute chart here, you see that rounding top? That's a bearish signal. So we could see SPX going into lunch hours here testing the lows. And when the SPX and the overall market breaches a 20% drop, then they close the market down for the day. So we could still possibly see that. That's only, 14% away. I haven't touched anything today. I'm not even risking it. I've never seen market conditions like this. So I'm learning right now, observing what's going on. mRNA opens up at 30, crashes down to 27, bottoms out at $25, and then grinds all the way back up to 27. VXX ran into a volatility halt on the downside. Look at this thing. Opens up at 40, down to 39, pops up to 41, crashes down to 37.50, gets halted, opens back up, down to 36. TVIX. Now, I normally keep my eye and my focus on TVIX, but this thing has just been very, very volatile, very, very risky. You gotta be careful. TVIX opens up at 300, slams down to 280, halts, and then opens back up at 299, 300, and slams all the way down to 247, a $50 drop. That's just too volatile for me. And then INO, this crazy stock, running from $4 all the way up to $19 today. This gets halted a few times. Right out of the open, opens at 19, slams down to 17, gets halted, consolidates right here at the VWAP, and fails just below the VWAP, and goes from 1750, slams all the way down to 15 and gets halted, and then grinds from 15 all the way up to 17, crosses over VWAP here from 17, pops up to 18, and then slams down back to 17, and now grinding its way right back up to 18. Really big volatility today. You got to be careful. Got to be real careful. So I'm still just observing, seeing all what's going on. We had AIM popping up. A lot of people probably got screwed on SPEX, not AIM. But AIM was gapping up from 2 up to almost $4. Gets in this range pre-market from 4 to 330s. opens up at 350, slams down to 3, pops up, and then grinds from 3 all the way up to 4, pulls all the way back down to 330, and now it's fighting just below this VWAP to get above it. And SPEX, a lot of people got screwed on this one. SPEX, right out of the open, opens up at 482, slams down to $4, and it holds. $4 holds, this thing pops all the way up to 550. That's when the overall market did a volatility halt for 15 minutes. Everything in the stock market got halted. And if you were chasing after this and bought, and then the volatility halt came in, this thing opened back up at 5 and slammed down on a 1-minute candle back to 4 and all the way down to 335. Pretty much a $2 drop on this stock within a couple minutes. Gotta be careful. But I'm going to do periodic recaps right here to give you guys an update on what's going on. And I'll check back in later. Alright guys, we're back. This will probably be the last update of the day. We are approaching noon on Monday, March 9th, 2020. Going back to the SPX. We had this big sell-off in the morning. It halted. Back earlier, I said we were getting this rounding top. That's normally a bearish signal, so we could test the day's lows. And then you see how the market did retrace all the way back down to the lows of right here. And then it formed this rounding bottom. And then up we went. And now the market is testing the high on the day from the, after this big sell-off right here. Markets are starting to settle down. Everything's starting to, settle down a little bit. I want to point out the VIX, the volatility index. I always talk about the VIX, always. I've made many videos on my channel about the fear index, the VIX, the fear gauge, many videos on this. I have never in my career as a day trader and analysis in the stock market seen the VIX up to 62 today. Very high up here. And if we bring over the daily chart on the VIX, you could see recently back in February, this was at 14. Today, it hit a high of 62. Now, if we go back in time, back when, remember at the beginning of 2018, at the end of 2018, it got really volatile, We had that big sell-off right at the beginning of 2018. The VIX hit a high of 51. And then at the end of 2018, remember when everything just crashed down really low? And then going into 2019, it just all shot right back up. The VIX hit a high of 35. But if we keep scrolling back into time and all the way back to 2008, when the financial crisis happened, the fear index hit a high of 89. Look at that right there. Let's zoom in on that. Back in 2008, October 24th, 2008, the VIX hit a high of 89. Today, it hit a high of 62. Imagine the panic that was today and then compare it back to 2008. There was even more panic back in 2008 compared to now, and the VIX only hit 62. Just a little fun fact I wanted to shoot out for you guys. Let's go over a couple stocks real quick, and then we'll call it. Again, I didn't trade anything today. I was just observing. We got the TVIX slowly retracing now. After 300, it's all the way down to 240 now. What I've been watching today is mRNA is one stock. This just had a 6 sell-off down from 30 all the way down to 25, bouncing up to 27, back down to 26. And then the big one, INO, this one has just been wild. This is untradeable. INO is untradeable. This thing is getting halted so many times. When a stock's getting halted and halted and halted and halted, for me, it's untradeable, because at any moment when a stock's getting halt this many times, the SEC could put a T12 halt on it and request further information from the company, and the stock could be halted for a couple days, a week, a couple weeks, months. It could be halted for a long time if it gets a T12 halt. So if you see a stock getting halted every 5-10 minutes, stay far and away from it. Just look at all these dotted lines is where it got halted. Here in the morning, right here on the downside, here on the upside, here on the upside. If it falls again, it could get halted. If it starts surging up to the VWAP, it could get halted. This from $16 fell all the way down to $9.36. So what, a $7 drop in the stock? And then from $9.36, this surges all the way up to almost $13.50. That's too risky, too volatile. You could easily take a big hit if you get caught on the wrong side. And then SPEX is having a good day as well. I was keeping an eye on this, but then I started editing this video and lost interest in it. And this would have worked out. It only got halted once from the open, but after this bottomed right here at around 340s, look at these two candles in the wicks right there. That's a perfect double bottom. That's a bullish signal. There's a buyer right there. From 340, worked its way up to the VWAP, fighting with the VWAP, and then right here in this area, it finally broke over and held over the VWAP right at a mental $4 level, and from $4 ran all the way up to $4.69. Very nice 60-cent pop on this right off from the VWAP. That's the type of move that I like to try to look for on a stock. If I see a stock pop up above the VWAP, I want to see it retrace and then hold that VWAP. If it's showing strength on the tape in the level 2 that it's holding the VWAP, I'll give it a go. I'll put my risk just below the VWAP, put my price target possibly at the high of day. It's like what Nate from Investors Underground said in his last video. Every Sunday he puts out a video scan. It made a lot of sense, and it's something that I've known. I like to stick with range when I trade stocks. When a stock's going for a breakout, I don't ever really try to trade a stock that's going for a breakout. Like what Nate said, stay away from trying to trade breakouts. You're going to fail majority of the time, because a lot of times stocks don't keep breaking out. They pull back to the level of support, and then they'll work their way right back up to the high, and it will just repeat the process over and over. So if you're a day trader, honestly, the golden tip and the rule is try to stick to range. Basic support, resistance. If you're fighting, always looking to buy breakouts, and you find yourself losing and losing and losing, yeah, I got a winner, finally. And then you lose and lose and lose and lose. You know, your process is all wrong. You're looking at it all wrong. That's why I say look at charts. Every day, every night, every weekend, you should be seeing charts. What are the charts telling you? What I see a lot of times is just basic range. That's going to wrap it up for this, guys. Be safe out there. This is going to be a wild week. It's only Monday, and we had this much panic on Monday. Hopefully we can start to see it rebound. We had oil taking a big hit. Let's pull up oil real quick, and then we'll call it. This is Gush. Gush was up at $5. Today it gapped down to $1.50. Halted with the market, slammed down to $1.30, and then rips up to $2.25. That's a big gap down for oil. And then we pull up drip. Drip from 277 gaps all the way up to $582. Hits a high of 666 from 280 up to 666. Wild. And then DWT from 950 gapping up to 1650. But you got to be careful with oil, because with oil moves very, very weird. Oil really only moves when a catalyst hits it. It gets that energy, it either surges it up or surges it down. And then once that catalyst has been out for minutes, an hour, a few hours, that energy starts to die off and the stock will just naturally retrace all the way back down to the level it came from, because that energy is drying up and the catalyst is just been out there and it's just turned into old news. With oil, the only time to really trade oil is when something hits immediately. That's really the only time. Sure, you got oil related stocks that you can stick to, but when it comes to the ETFs and index for oil, that's what happens. And then the last one here, USO, United States Oil, from 875 down to 650 here. There's a lot of opportunity in the markets. A lot of opportunity. A lot. And then we got HP. Look at this little run up it had today. Recently, this has just been getting destroyed from 38 all the way down here, $18.50. So from $38 all the way down to $18.50. Today gets a nice grind from $18.50. Just grinds non-stop. Little pullback, continues all the way up to 23. Very nice. And then these cruise ships is another industry to be keeping an eye on. Cruise ships and airliners with the coronavirus. Look at RCL from $82. This has just been getting destroyed all the way down to $47. And this has had a couple opportunities on it. Friday, Sully called this out in chat Friday, and I missed it because I was trading INO. Did a beautiful bottom right here at $62. Right here. And from 62, had a nice pop up to 64, and then consolidates and pops up to the VWAP at 65. A nice little $3 range from 62 up to 64 and 65. So nice opportunity here on Friday. And then the same thing happened today with RCL. Right here in the morning. Bottoms just like it did Friday at 51. And from 51, this gets a nice little pop up to 52 and 52.50. But when we look at the bigger time frame for RCL, look at that. 135 all the way down to $50. This is opportunity right here, or it could be opportunity. Just like the oil spill back in the day. Now, with the coronavirus, it's affecting all of these airliners and cruise ships, casino resorts. So just keep an eye on those sectors and industries. Same thing with CCL, Carnival Corporation. From $52, this is all the way down to $22, and it's still going down. That's the thing. Never try to predict the bottom with these stocks. Don't try catching a falling knife. Wait. Keep an eye on it. Plot levels out on it. Observe. And then when you feel like it's ready, go for it. And then one last thing before I leave, we'll do SPX one more time. Remember when I said stop chasing breakouts? It's all about range. Put a big line on this connecting the lower highs. It's got support all right here at $3.80 to $4. Look at that. Back and forth. From there up. And then right in this area right here. Boom. Up. Boom. up. Now it's going to probably fail here, and it's going to come back down all the way until it gets tighter and tighter and tighter. And then when it gets tight in this descending wedge, it's either going to break to the downside or it's going to break to the upside. And then you would look, if it breaks to the downside, this bottom part right here to act as resistance. Or when this breaks to the upside, watch for this to hold as support. It's just practice of looking at charts. You see this happen many, many, many times. And this is how traders make their profit. They spot a pattern, they put the lines on it, and from there, they buy. They sell. They buy. They sell. They buy. They sell. They buy. They sell. When you're up here and the smart money is selling all right here and you're trying to buy for a break to the upside, only for the stock to come right back down. You just got to recognize what's happening over and over and over. It's just human emotions. It happens over and over and over again. Human emotions, human nature never changes. Never. But that's going to wrap it up for this, guys. Be safe out there. It's only Monday. If you didn't trade today, that's okay. Remember that. You don't need to trade every day. You wait for opportunity to come to you. You wait for a trading setup to make sense to you. Be safe out there, guys. Until next time, have that patience, have that discipline, and study, study, study. Later, everybody.
The most valuable commodity I know of is information.